start. Oops. Okay. Good morning. Today is Thursday and the 14th of June. We will continue with chapter 8, and we're going to do some examples. We're going to do some examples for cash control methods, particularly petty cash and bank reconciliation. We're going to use first the examples in the book, pages 312, and through pages 317, and after that we will do some practice. All right, but for the time being we're going to start collecting some homework. All right.
So I can give you my test too.
Yes, sir.
Okay. 3, 4.
We'll change this one to 15. Don't hit, just leave it.
Oh, well, 5, 3, 4, 5.
3, 4, 5, and then
It's a test.
this. Thank you. Wait. You answered everyone? Did you go online?
Yes, sir.
Okay. And you presented this one?
Yes, sir. Oh.
Did you, but just, you don't have to do just do submit.
Oh, yeah. Yeah.
Thank you, appreciate it.
Yes, sir. Thank you.
Okay, let's go ahead and start with bank reconciliation. We're using, as I said, pages 312. Now, remember last time why the balance, we mentioned why the balance per book does not equal the balance per bank. We said there are 3 or 4 reasons why it should not. Why they don't. Why are they not equal? One thing, because of the outstanding checks.
Outstanding checks, ones that have not cleared yet, right?
Yes, sir.
Because you said the bank, like someone might write a check Friday afternoon. They said to the bank it won't be ready to like Monday or Tuesday.
Mm-hmm. And the other reason is deposits in transit. What is a deposit in transit? Deposit in transit, those are the checks that you deposited and they have not been added to your account yet.
Okay.
For example, if you go Friday afternoon, probably around 3 or 4 o'clock, and you deposit some checks, they will not show on your balance until maybe 1 or 2 more business days, which will probably be either Monday or Tuesday. And then also another reason is NSF checks, insufficient funds, just in case you write a check and you don't have balance to cover it. You don't have money in your account to cover that check, and that is a non-sufficient fund. Okay, and there is also a service charge. The bank usually do service charge. I'm not sure if they do this service charge these days. At least my bank doesn't charge me service charge. They used to a long time ago.
They still charge service charge, but that's only if you go to a bank that you're not a part of. Like
Yes.
If you go to like ATM, withdraw money from that's not your bank, they charge like $3.
Yes, that's correct. And also, maybe there are some charges for some services. If you are not one of their favorable customers, if you want to buy a check, certified check, or money order,
That's for everybody. Even my bank, they charge like 50 cents if you want to get a money order.
No, not my bank. Yeah. See, if you have certain balance, they won't charge you.
I mean, that's just for everybody. They even have a sign of all money orders 50 cents.
So these service charges show on your bank statement but they don't show on your balance per books. They don't show on your books. So you have to put it on your books too. So if it's showing on your books, but not showing in the bank, you have to show it on the bank. All right? And vice versa. And also, sometimes there are errors. Like we said last time, if you're supposed to write your check, you're supposed to write a check for example, 287, and you write it for 872. Yeah, things like that happen. You got to do a correction, yeah. And also, sometimes the bank collects for you interest. That interest shows on the bank statement, but doesn't show on your books. So you have to reflect it or include it on your books, yeah. So, with that in mind, let's go ahead and take a look on page 313, and you see this exhibit 3. This is a bank reconciliation, and I'm just going to give you the formula first for the bank reconciliation. Now, in the real world, okay, in the real world, you have a program. It's an Excel program, very easy. You just put the formulas in it, and you fill up the information in the appropriate section. So you start with your balance per bank, okay, balance per bank, and then you have a section for balance per books, okay. And every time you enter something, the balance of the two sections show up. Every time, and they have to be equal. Okay, so let me go to Excel here for a second. And
balance per bank must equal the balance per books.
Yes, the corrected balance, the adjusted balance per bank must equal the adjusted balance per book, yeah. The adjusted ones, yeah. All right. So we will start with, of course, you're going to put the title first. The title. And the title includes the name of the business and includes the title of this statement. In this case, it is bank reconciliation. And then you put the period. In this case, it is monthly. So you do a bank reconciliation for every month of the year, of your fiscal year. Okay, so you start with your balance per bank. Balance. Okay, balance per bank. And that is at the end of the month, usually, because that's what you receive. Usually, balance per bank, end of month, end of month. See, this is when you get your bank statement. So that is the balance, your cash balance at that point, yeah. All right, and then we're going to add to that deposits in transit. Okay, there is something here I take this out to avoid confusion. Add to that. So let's assume, let me go back to here, F2. Let's assume that your balance is $200. All right? Let's assume your balance is $200. And then we're going to add deposits in transit. Add F2 deposits in transit. Those are the checks that you deposited, and they show up. They don't show up yet. They're not showing up here. They have not been cleared. They have not been added to. See, Usually, businesses have cash receipts and cash payments, journals. Okay, so in order to do a bank reconciliation, you have to have in front of you your cash receipts journal, cash payments journal, and you have to have also your bank statements before you do this, all right? So you look at your cash receipts, all right? Your cash receipt journal, okay, you have 4 or 5 checks. Have they been cleared, those 4 or 5 checks? If they haven't been cleared, that means they are deposits in transit. If they haven't been added to your account, they are, let's say you have 10 checks from your customers, 10 checks, all right? And then those 10 checks, of course, you're going to write them on your cash receipt journal, all right? And then you put them in a bag and you send them to the bank for deposit, all right? And then when the time for bank reconciliations come, okay, you're going to look at those checks that you collected from your customers. Are they showing there? If they are showing, that's fine. But if they are not showing, that means they are deposits in transit. Deposits in transit, yeah. All right? So, add deposits in transit, and then we're going to say maybe, let's say you have check number, all right, deposit in transit. You have a check. Oh, no, not that. Check number. Check number 201. Check number 210. Those are, they have not been added yet to, and again, it's not necessarily checks. There could be some other funds, all right, that you have deposited and they have not shown up on your. So this one is $50, and this one is $35. So the deposit in the transit are $85. All right, $85. All right, and so how much is the total now? Subtotal. If we put a subtotal, 285. That's two. We put a line under this one, and I put the. You can put the subtotal if you want, and you don't have. That's fine. You just say 200, and let me put this over here, 285. A little bit further. 285. All right. Now, these are the additions. Now, good morning, sir. Yeah, yeah. Excuse me for a second. Okay. Yeah. Before I leave, I'll make sure. English. 1302. All right. No problem. Yes, sir. Okay. Yeah. All right. All right. Now we're going to say less outstanding checks. Those are the checks that you wrote, but they have not been cleared yet against your account. Okay. So these are the additions, and then we're going to say. I'm going to put some space between, so you can see less. Okay. Outstanding checks. Outstanding. Okay, checks. Oh. All right. Let's say you have a couple of checks. Okay, let's say you have check number, all right, and this one is for $10, and check number, and this one is for $7, and check number, 7 for $15. All right, and so these are the checks that haven't been cleared yet, and the total is
32.
how much?
32.
$32. All right, now and this, so if you take this 32 out of your 85, let me put this here, 32 and here instead of here. All right, and let me put a line under those. Okay, you take those out of the 285.
Oh, 32 minus 285.
285 minus 32. 285 minus 32.
253.
Huh?
253.
That's 253. So this is your adjusted balance per bank. All right? Let me put it right here, 253. And that's called what? Adjusted balance per bank. That's the correct balance. Adjusted balance per bank. All right? Adjusted balance per bank. Okay, I'm just there before, I haven't even gone to this, yes, in the book yet.
Oh.
All right? We're just doing an example, doing the formula. Now we're going to do the second section of the bank reconciliation. This is the first section. All right? This is the section for the bank. Now we're going to do a section for the books. All right? So we're going to say, you're going to first put your balance. Okay, balance per book. Balance per book. All right, and let's assume that you have, let's see, that you have $50. Okay, now where do you get this balance from? Supposedly.
From all your transactions.
From your cash receipts journal. From your cash, cash journal. Let me just say cash. Or like, remember when we did the bank reconciliation, and when we did the general ledger, and you have the cash account, that's where you get it from general ledger. Yeah, the cash account in the general ledger. All right. Usually that cash does not equal your balance in the bank. Yeah. Well, it may, and may not, but most of the times it does not. Yeah. All right. And so we're going to add to that. See, notice, just like what we did with the balance per bank, we have addition and we have subtractions. The same thing for balance per book. We have additions, we have subtractions. So what do we add? Usually you add collections made by the bank on your behalf. Collections, okay, add. So I'm just going to write a common statement. You add collections, collections made by the bank on your behalf, for you. Let's just say for you. All right? But you don't have to, when you do one, you don't have to do that. I'm just writing this comment for you. You immediately start adding the things that were collected. Yeah, but I'm writing this comment for you. So you will know what you should add. All right? All right. So what does the balance usually collect for you? It collects notes.
Receivable.
Yeah, notes, receivables maybe. So let me just say here, notes, and I'm going to put here notes, receivable. So if you have a note from somebody that you made them sign a note for you, and that guy went ahead and put it in your account. Okay, let's say this notes receivable is $10. Let's make it $100. It's too cheap. $5 or $10. Okay. Now this comes with it. Remember, when you collect anytime you collect interest, it has. Notes. It has interest on it. So let's say also interest on the note. Interest. And on the note. So let's say that you have $20. All right. What else can the bank collect for you?
Interest, income.
What's the difference between interest income and this interest?
The interest may be from the money that you put in the bank and let it like sit over time.
Yes, sir. Exactly. Yeah. So we're going to say interest income. In this case, interest income. And what else can the bank? Well, if sometimes you have, like for example, the schools in general. The schools in general, when they receive the funds, financial aid funds, will come to their accounts, the school account, and then the school will disperse these funds to tuition and fees, and anything left over they give it back to the students. So that's a collection made, okay, but it's not showing on their books. It shows on the bank, but it's not showing on their books yet. Okay, so that's another example here. So let's say that the interest income is $10. So far we have 50, 150, 170, 180. We're going to make it equal to 253 because they have to equal, yeah. So if you add all of those, what do you get? You get
130. 180 because we got 52. 50 plus 100.
Yeah.
Plus 10.
It's 50, 150, 180.
Yep.
So the total, let me put that over. Okay, let me do this. F2. And push the back the 10. And put the total here is as 180. All right. And now we look at other items. Okay, we look at other items that may be for you or against you. The other items, yeah. All right. So let's say that. Oh, sorry. These are the additions. Sorry, these are the additions. All right. Let's assume when there's one more addition. Listen, because we need some numbers here to make it equal. let's assume that you had a wire transfer.
Okay.
Okay, wire transfer.
Like Western Union.
Yeah, wire transfer. Okay, for the wire transfer is for if we say $100, what would be our total? Would be 50, 150, 180. This is $100. All right. So your total is now 280. Yeah. Now we're going to do the deductions now. So remember we said the balance per bank has addition and subtractions. Same thing, the balance per book has additions and subtractions. All right, let me put a line under this one. So now we're going to go to the list. All right, what kind of deductions we have? One of them is service charge. Okay, service charge. The bank usually okay, service charge. Okay, let's say you have service charge. Let's say you have $20. All right, and also let's assume that you have a check that's supposed to be 178. So it's supposed to be 187, and you wrote it for 178. Okay, it's supposed to be 187, and you wrote it for 178. So you're short in this case. How much you're short?
$9.
Only 9? 187.
No, wait.
28. Yeah, you're right.
Yeah.
Yeah. Let's make it a little bit larger. Let's say it's supposed to be 278, and you wrote it for 217.
Okay.
So you sure it's supposed to be for 278, but you wrote it for 217. So you're short how much? 61. Okay, so this is an under. Okay. Yeah. Yeah. So this is understated amounts. I'm just writing in common things. Yeah. For how much we said? $61. All right. You may have a collection fee. You have other fees also. Yeah. So how much is the deduction here? 60, 82, 81. If you take 81 from 280, what do we get? Well, first of all,
199.
that means we are still short. So let's change yeah, how much? 199?
Yes, sir.
We need 253.
So 54.
So let's say this one is what? 280. Let me see. What is the difference between 280 and 253? Are you that thing is
I want to say 27. You said 280, 250.
27. All right. Okay. Let me use mine to see. Okay.
280 minus 250 is 27.
280 minus 253. So we need 27. So let's say let's go back to our, let's say this is 7. Okay, this is a $7. Go back with the first one that we did earlier. All right. So the total deduction is 27. Okay, 27. So the corrected balance now per bank is, per books, adjusted balance per book is 253. So this is a bank reconciliation. Remember, in businesses, they have to do that every month. Every month, somebody in the business department has to do that. Okay? Are you okay?
Oh, yeah.
Or are you sleepy?
No, I'm good.
Do you want to go put some water a little bit on your face and
I'm fine.
you be awake?
I'm awake.
Okay. How come the others didn't show up today?
Darren, he texted me. He said he didn't have a ride home or something like that last night, so he wasn't gonna be in class this morning.
Okay, that's fine.
I know Goodrich and Ledbetter, they went to Houston last night for something. So
Okay, but they have their homework and everything. Yeah. Okay, good. Okay, so before we practice, let's do also now we go back to the petty cash funds. Now, like we said yesterday, the petty cash fund is usually established for
like
some miscellaneous expenses and
that money is
Uh-huh.
set aside.
yes, sir. So let me go down here and put a title. Petty, Petty, petty cash. Petty cash. All right, and so let's make this big and underline. All right. So the first thing now, this is a different. You're going to treat it as differently from the main cash of the business. Okay. Oh, this is a.
I see, Doc, your phone went off in class when class dismissed.
Huh?
Your phone went off in class, Doc. Class dismissed.
No, not now. Somebody sent me a link. I don't know what it is. From Jordan. Yeah, I'm not even going to open it yet. Oh, let me put this on. I forgot to put it on silence. So, the first thing we need to establish the fund. The accounting procedures first is we need to establish a fund. If you look, before we go to petty cash, I'm sorry. Look at this example, Exhibit 3 for bank reconciliation. Again, you notice there is the explanations in the bottom. Here, 1, 2, 3, and 4. It says the circled numbers in the exhibit refer to the following. The bank has not, see the circled ones, these circles?
Yeah.
These are coming from here. So usually you will be given the transactions, you just have to put it in the proper order. Okay, if you look on number 1, the bank has not recorded deposit in the amount of 138. So that 138 must be what? A deposit in transit, yeah. And then the bank has not paid 5 checks. So those are outstanding checks. And they are listed as you can see here. So you got the adjusted, you got the total beginning balance and deposit in transit, 1,873.53 cents, and then you deduct from it those outstanding checks, and you get 1,277.94. And then you're going to go to the second component, okay, which is the balance per books. Yeah. If I were to write a formula, how would I do it? I would do it this way. Okay. Balance. I do it this way. Okay. Balance per bank. Okay. And then I'll say plus deposits in transit, all right, minus deposit in transit. It's not doing, it's giving me a formula. F2. Let me just say F2 here. I'm gonna remove the equal. Let me see. Let me just say this is a text. So ABC. Okay, plus deposits in transit, all right, and let me also put this one as a text. Okay, minus outstanding checks, minus outstanding checks. That gives us
Adjusted bank balance.
so let me put in here also a text equal adjusted balance per bank, all right, and then okay, this adjusted balance per bank must equal the adjusted balance per books. So you're going to say balance. I go down in here. Let me just do all of these as text. Okay, balance per books, all right, balance per books plus what? Collections made by the bank, collections, all right, minus miscellaneous, like service charge, NSF checks, minus miscellaneous, okay, equal adjusted balance per book. So these two must be equal. The adjusted balance per bank must equal the adjusted balance per book. All right, that's the formula. Okay, so make sure you understand this formula. Okay, yeah. Now we come back to our petty cash. So look at this exhibit 3, and make sure you look at the notes below it and see how they are plotted on the exhibit. Okay, like I said, in the real life you will have a Excel spreadsheet. All right, every time you fill up something here, then the two adjusted balances will show up. The two adjusted will show up immediately. and then you keep doing until they are equal.
Oh.
Yeah. It's set up. There are formulas to be set up. Like these two, you have these major categories. They are set up in a worksheet.
Okay.
Yeah, and then every time you see this one will show up, and this one will show up. And you fill something, this one will show up, but they're not going to be equal until you finish it.
Oh.
Yeah, then they will. If everything is correct, then
Be good.
you'll be good. Yeah. If the two don't equal, phew, I'm telling you, the most difficult one is usually the operating account. So you may have a payroll account alone, and you may have operating account. You may have accounts for special purposes. You got to do bank reconciliation for every one of those. But the most difficult one is the operating ones. That's where you have checks canceled, you have miscellaneous things, and yeah, that account is a headache. Yeah, to make a bank reconciliation, you're lucky. You may do it in one day, you may do it in a week, a whole week, because you got to go back to the records, check on your cash receipts and cash payments, and see where did you go wrong. Yeah, okay. So the first step in the petty cash fund is to establish the fund. Okay, is to establish the fund. Now, when we establish the funds, we're gonna debit petty cash and credit what? Cash. Okay, to establish the fund. Okay, we're going to debit. Let's say that we establish a fund for $500. All right. Now let's make 200.
Okay.
200. So we're going to debit.
200 petty cash.
Debit. Now I've got to say petty cash. Okay, for $200. All right, and then we're going to credit cash. Credit cash for $200. So now the question becomes, what's the difference between these two cashes?
Petty cash is debt because that's just the money that you have on you. Like, you know what I'm saying? Like that you. It's petty cash when you have it like just sitting there before you spend, but you credit the cash because you're actually spending it then, right?
This cash is the cash of the business,
Oh.
the main cash account.
Oh, okay.
So you take the money out of that and you put it in the
petty cash.
petty cash.
Oh,
Yeah.
okay.
All right, that's the difference. Yeah.
I'm
Okay, now whoever is in charge of the petty cash fund, every time a amount of it is spent, you must have a receipt. Okay, they call it voucher. You must have a voucher that shows that the amount and what was the purpose for spending it. Yeah.
You actually went out there and paid for it, what you said to pay for, so
Mhm.
it's like pocketing the cash. Or something.
Yes, and you will replenish this fund every month. Let's say this one is for a monthly amount, yeah. So every time you will replenish it, yeah. So let's say during the month, the following transaction, the following receipts were in the box. Let's say that you put these in the box. The following receipts were in the box. So you have postage stamps for $20 $20. You have a receipt for dinner, as a business dinner, for $50. You also have some supplies for $40. Okay, supplies for $40, and you may have also that's 90, 110. Let's make the supplies $70. So that's now 70 and 50, 130, 120, and 20, 140. And this also you have what can we what can we add? Let's say taxi cab from the airport. Business has to pick up somebody, and so let's say we have 50, 70, 140, and this one is $80. Let's see, 80 and 70 is, no, that's too much. You have to 6, let's say 60. 60 and 70, 130, and 180, that's 200. Let's make it also less. F2. Let's make it 50. All right. So now, how much we have? 50 and 50, 100, 190. Unless that there was cash also that hasn't been spent. Okay, cash for $10, huh? All right. So the box now is short. How much has been spent out of it? 190, and we still have $10. Now we need to, the new month, we need to, first of all, we need to have a journal entry. Okay, that's when we do the replenishing. We do the replenishing. Okay, so we're going to, when we replenish it, we're going to debit all of these expenses. All right, so we're going to debit postage expense for $20. We're going to debit dinner expense for $50. We're going to debit supplies expense for $70, and we're going to debit that's it, I guess, taxi, yeah, transportation expense, expense for $50. So how much we should bring from the cash account?
Bring over.
We're going to replenish, we're going to take out the cash, main cash, the total of these, 190. Why didn't we put 200? Oh, let me just see.
Because we didn't spend on too much.
So we're going to credit cash for 190. All right. So let's assume that the cash. Let's assume that let's assume we have shortage. Okay, let's assume that we we don't have cash. Let's assume that we
Used out of 200.
okay. Let's add another. Let's say that the taxi is F2. Let's assume the taxi is instead of 50, $61. So, well, let me just let's delete that. I'm trying to see that sometimes you have let's assume that the cash is $9. Sorry, instead of 10, $9. So what's happening here?
Someone took $1.
So we are short
$1.
$1. So in this case, what do we do?
Keep doing it again till we balance it out.
No, we are short $1. So that means you have to debit cash short or over. So you got to debit here, cash short or over. All right, that means we're going to get $191 in cash. All right. Assume that you have $11 in cash. Instead of 10, you have 11 instead of 10. That means you have $1 over. In this case, you have to debit the cash with these amounts minus $1. And then so you have to credit cash short and over. So if you are missing, you debit cash short and over. If you have an extra, you credit the cash short and over. Is that clear? Okay. All right. These are the two impressed cash techniques, that impressed cash control techniques that I'm looking for in this chapter. Yeah. So you will notice that when that you will have a question on the assignment that has to do with the formula. Okay, you don't have too much details. One question that doesn't give you the details. Okay, it doesn't give you the details, but you have to know this formula to answer the question. Yeah. Okay. I do believe maybe we can today just practice one question. Are you in a mood for practicing question, or you?
No, we could practice.
Okay, yeah. So let's go to page. Go to problem 5, page 329 in your page 329 on the textbook. Let's do problem 5, and by the grace of God on Monday we will do problem 4, because it's going to take us a while. Yeah. Problem 4 asks for bank reconciliation, and problem 5 calls for a petty cash. So let me go to a new page here, or I can stay on the same page, or we'd rather have a new page?
You can stay right here.
On this one?
Yes, sir.
All right. Read for me.
A small company maintains a petty cash fund for minor expenditures. The following transactions occurred in June and July 2014. So for A, the fund was established an amount of $600 on June 1st for the proceeds of
All right.
check.
The requirements are in the back. Say they have two requirements. On the back of this, on the next page, it says prepare the journal entries necessary to record each of these transactions. All right, record. So how do we prepare journal entries? Remember, first one, when we establish it, we're going to do a journal entry like this one here. You see? So that means we're going to debit petty cash and credit cash for how much?
600.
All right. So this is a problem 5. P5. P5. Page. P5, page 329. Okay, that was A. So for A, which is June 1st, sorry, June 1st. So on June 1st, okay, June 1st, we're going to debit petty cash. We debit petty cash for $600, and we're going to credit what?
Cash.
Okay, exactly, credit CR cash for $600. All right, that's June 1st. All right, what happened on B? On June 30th, the petty cash fund had cash, like the box. Let's say you put the $600 in the box on June 1st, and on the end of June, the box has in it these following receipts, okay, or vouchers. They have cash $92. That means they haven't spent the whole money. So they have cash for $92.76. They have postage $240, supplies $149.64, delivery service $74.40, and rubber stamp $43. And then check number 157 was drawn to replenish the fund. All right, that's probably going to come on the replenishment. Yeah. So what do we on June 30th? On June 30th, we're going to debit like we did with here. You see this? What over here? Yeah, we're going to debit all of those. Okay, so we're going to debit postage expense for how much? 240. We're going to debit what? What else? Supplies.
149.
Wait.
64.
Supplies for how much?
$149.64.
149.64. What else?
Then you got your delivery service.
Delivery service.
This is $74.40.
Service. For how much?
$74.40.
40 cents. What else?
You got your rubber stamp.
Rubber stamp. Anything other than rubber stamp?
You got the.
That's it.
Yes, sir.
So instead of just saying rubber stamp, usually the companies will have an account called miscellaneous. So that since it's a very small item, so you would say you can debit miscellaneous. Miscellaneous for how much?
$43.20.
$43.20. So now we need the money. We need, how much money do we need to replenish this amount? Remember, they have a check number 1577. Okay, that's the, we're going to credit cash. Credit cash for how much? Add those.
$507.24.
Yes. How much you said?
$507.24.
507
Yes, sir.
point
24.
24. That check the 1577, that's what written in them. So in order to put the money back, because this should have the add the cash amount to that also. See if you have 600.
Yes, sir.
The cash amount was how much?
$92.76.
Add that and see if you come up to
600.
600. Yes, sir. All right. Now that was on B. Now on C. On C, which is
31st, the end of July.
July 31st. July 31st. What happened on July 31st?
You had the cash fund had $132.36 worth of cash left. And the following sheets had on hand were the postage, the supplies, and the delivery service. We had to get it, and the petty cash custodian could not account for the shortage.
$16.28. That was a shortage, yeah. So that shortage, is it, since now is against them,
It was written to replenish.
so we'll debit that.
Uh-huh.
All right? So, on July 31st, what do we debit?
So we debit all the
Yes, like what we did with the, what are the things that were debited?
okay, we're gonna debit the postage.
Okay, postage, expense, for how much?
$205.20.
205.20. What else we debit?
With the supplies.
Supplies,
Yes, sir, for $197.
for how much?
$197.04.
197.04. What else?
Then we got the delivery service
Delivery service,
for $38.40.
service, for how much?
$38.40.
38.40. All right, now we have a shortage of how much? We got to, since it's a shortage, we have to debit it, all right? It's called cash short or over, all right? Cash short or over, yeah. So we debit cash short backslash over, because it could be both, yeah. For how much?
So, 440. No, that's a total of all the expenses. That's what you want. So I take that and subtract 600 from it.
How much is it short or over?
$159.
No.
Hold up.
Okay, that's fine. Let's leave that empty. First of all, how much is the total here?
Yeah.
Add all of these.
That's what I was getting you.
Add all of these and the cash. What do you have?
Oh, okay, yeah.
Yeah, add all of these and the cash.
Plus the cash would be $132.
That's $573.
500 and
$73.
okay, that's what
You have
it's supposed to be. 573, but 573, correct? Oh no. Do this one more. Sorry, do this. 600. Do one more time for me. 600 minus 205.20
Okay.
minus 197.04
Okay.
minus 38.40.
Okay.
How much is that?
159.36.
All right, 159.36.
Then you want me to subtract?
But the question is, how much cash was there?
132.36. So you want me to subtract that from 159.36?
Yeah.
$27.
Yes.
That's how much you are short.
That's how much we short. So that's why I put that here, and then we say $27. All right, and then we're going to credit cash. For
$27.
how much?
Alright.
Altogether.
Altogether.
Uh-huh.
Oh, that was.
Including the shortage. Those expenses plus the shortage.
$494.64.
How much?
No. $467.64.
Yes. For 67.64.
64.
Yes. That is the journal entry on. Notice that we have to come up with these $27. Now, what happens if we have an extra 27 extra? Then we'll have to credit.
We are. Oh,
If-
yeah. Okay.
If we have extra, then we will have to credit cash short and over and reduce the amount of cash because we have some extra. Okay. All right. That's number
Let's see.
question number 1 for the petty cash. Question number 2: how do you connect accounting with this thing? With the it says here a charity reimburses volunteers for small out-of-pocket expenses such as parking and gasoline. And then how might an impressed petty cash fund be helpful in controlling the expenditures? So how does the petty cash, how is it helpful for controlling cash or expenditures?
So, do you keep track of? Like I said, so you keep track of
Uh-huh.
which like time.
In cash, in fact, this is a controlling and auditing mechanism. Okay, has been already established. A control technique has been already established.
Yeah.
All right, we have a petty cash fund of $600,
Yeah.
and then every amount spent is shown with a receipt. And if some amount is spent like this, $27, we were short. See, we have to come up with there is a mechanism. Control is in order already here. So this is you can check how the money is spent.
Yeah. So like, I mean, I guess it's so volunteers won't try to get over on like, oh, like they send them a message like, oh, I drove 100 miles, but I need to be reimbursed for gas when they only drove like 20.
Yes, sir, exactly. We have such and such amount only.
So he said like, they'll tell them, oh, when you go get gas, bring me the receipt and all that, so I can
Yeah.
reimburse you for that amount of gas
Mhm.
you spent.
Very good, yeah. That is the connection, the accounting connection to the petty cash fund. Since you're the only one here today, and so we're going, I'm going to post chapter 8 assignments on JIX.
So you're gonna post 6, 7, and 8.
They're already there. 6, 7 are already there. 6. I'm going to put 8 today.
Okay.
Yeah, I'm going to put 8. And in fact, I'm going to be shortly, once we're done, from here we will go there and do it. I will go and put it, and I'm going to grade what you gave me. Yeah.
Yes, sir.
All right. So I can see you are a little bit.
Oh yeah, I was working late last night.
So, but you made it.
Oh yeah.
You made it. Let me put you present for today. Let me get the attendance sheet. And today is the 14. 6/14. Today, by the way, is the last day of Ramadan.
Oh yeah.
The fasting, yeah.
I know you.
Tomorrow is a big celebration.
Oh yeah.
All the people in the Islamic world, they will be celebrating it. Some of them may celebrate Saturday, because the first day usually it's a controversial day. Some people won't start fasting until they see the moon, and they won't break it in Ramadan until they see the moon again. So there are a lot of people, Arab people and Muslim may do it on Saturday, but for our community here in Thailand, we do it tomorrow.
Okay, I know you happy about that.
Oh yes, sir. Next time you will see me here with a cup of coffee. All right, so I'll put you present here. All right, have a good day now.
You as well.
All right, and I'm going to stop the. Okay.